Um, Hi, everybody. A very warm welcoming from Egypt, actually, from the sunny Egypt, to all of you in that first official annual conference of the Euro-Mediterranean Guarantee Network, the EMGN. And I have to stress on the official, because starting last year, that was when we officially established the network. Regrettably, we cannot actually be together physically due to all these circumstances that we're facing in the 2020. But I have to say that this virtual facility gives us all opportunity to keep connecting, and I hope it will not be less conducive, to the direct interaction and to share our interesting stories and to talk and to have the different debates and to share all our experiences. So we're very happy to have this first official conference of the EMGN, which has a very, very actually special place in the hearts of the number of the guarantee schemes and the bodies who were behind the making this dream come true. Because it's a dream that I can take it back maybe to 2006, 2008. You might be surprised about the dates, but these are real dates, back to 2006 and 2008. We joined as the Southern Mediterranean, a project with the EU guarantee schemes. It was the GO network, and that involved 4 countries. It was Morocco, Jordan, Lebanon, Egypt, and the North Mediterranean guarantee schemes of Italy, Spain, Greece, France, and many more. And it was our first encounter even across the southern group of the guarantee schemes, to interact together. We were working, Morocco was on board from the 70s, Egypt from the 90s, followed by Jordan and Lebanon. But we were kind of separate islands working independently, had no interaction, we were not working together. This project collected us together, and since then, it was like we built different ties. We had channels of communication, and we'd seen the European network EECM, and the idea about establishing a network was very important to us as guarantee schemes. And since then, we started the dream. From the people there, that I know, lots of names over there, that witnessed this story with me. It was not only me, it was Khater with me, actually Khater Abu Habib from Lebanon. So he started at 26, 28. Mohammed Al-Jafari joined after, and the rest of the team, Hisham Zanetti from Morocco, and the rest actually joined after. It is not, I would like just to say something about the network, because some of you may not be aware about this, because you will say a network. It's a network. So what? We get together, we chat, we meet once a year, we exchange something here or there. So okay, it's nice to have a network, and but why are you giving it that importance? No, it is crucial. It is crucial for us as a guarantee industry. When we talk the guarantee industry, we talk about risk share, risk coverage, risk mitigation. It's all about risk. And there is no scientific book about that. We have no reference books, actually, to talk about the guarantees. When we talk about the guarantees, we learn from each other experience. We have the practices. We have others who started before. We have those who started different models, and we're learning from them. When we want to do something, for example, when I have a product, I just go and check with my colleagues all over the world. Just last week, I was with a colleague from Colombia talking about bond securitization. A week after, we're talking about private equity. We're talking about portfolio guarantee and others. So the guarantee industry is very unique, very unique. As we said, it's all about risk. Risk that some of this risk, you can predict, but lots of these risks, that we cannot, as per where we are now. Nobody predicted such a thing before, and here we are with COVID. Nobody can even predict it, actually. Even with the financial crisis 2008, risk could be predicted. I believe there was a book, even the Black Swan, actually came from Talib, Nasib Talib, and he talked about, we could predict the risk of the 2008, but where we are as a risk now, and the consequences of the COVID, nobody predicted this. Nobody could even think about it. And as guarantee, working around the risk, and the risk, as I said, coverage share mitigation, we need constantly to change ourselves. We should be very dynamic, We have no limitation on how we change, on how we adapt to the new, on how we step to new products. We have no limits, to how to operate, and we should support our economies to overcome whatever financial crisis they are in. And that's where the networks are crucial to us. And that's why we were so happy to have the EMGN network on board, where we signed the official establishment of this network last year, in December 17 last year, with a long story, as I said, started from the 2006 and 2008. We moved from 2006 to 2008, and starting during the period of 2008 to 2013, Union for Mediterranean, the UFM, actually was the umbrella under which all the ideas of establishing the network was there. UFM stepped in, adapting us, and started to work and give us the support. And through this timing, we developed the concept itself of the network, the structure of this network, and how it should be working, and why we were saying it's just this North and South Mediterranean, because, as I said, we're learning from each other. We know that there are some advanced schemes, our colleagues in the North Mediterranean, that we are learning from them, and we're going to them to share ideas and to fine-tune our thoughts, and we're even talking, my friend Virginie from PPE France is there, and whenever I have something, you find me talking to her and actually asking her opinion and others. So from there, actually, we started to work. It took us some time. I can't say some time, it's too much time, but thanks God, we're there. We have the network, very momentum. We built our network, because if you think about it, it was December 17 last year. Here we are with where we are with the COVID and consequences, and the role of the guarantees that will be covered during the sessions of today. So here we are, we were really in need. So we are blessed by having this network last year. I'll take it from there, actually, because I go to Ambassador Nasser Kemal, because really, as we said, he is the Secretary General of the UFM, and he is the one. He's really believing in that. He got us back actually on the 19th, in 2019 in Barcelona last year, before signing there, and encouraged all of us, to go for this network. Ambassador Kemal, prior to be the General Secretary of the UFM, had been a very known ambassador in Paris and UK, in the US for the Egyptian government, and he has really fingerprinted all these areas that had been there, and we were very lucky to have him on board, supporting the establishment of this network. And I'll leave it for Ambassador Kemal, to start and talk about the UFM and the role. Thank you very much.
Thank you very much, Dr. Nagla Bahr. And I need to start by saluting your efforts and initiative that you have just mentioned, is dating back to 2006, all the way to 2019, where this network has been officially established. When I look at the list of participants, I see so many familiar faces, and I dare even say friends. So a very impressive list of participants to this network that you rightly said fits perfectly into our mandate as the UFM. So I'm very happy to be addressing you today at this important event that, in my view, enshrines the much needed attention to micro, small, medium-sized enterprise support at a time, as you mentioned, the current pandemic has left no stone unturned. As we all know, the crisis has led to far-reaching global disruption in terms of value chains, contraction of trade, and also shrinking of investment flows, especially to the MENA region. Our country are facing huge fiscal deficits and are bound to accelerate the expansion. This is bound to accelerate the expansion of the informal economy, migration. I dare even say it could lead, unfortunately, if we do not take the right action, to increase radicalization, violence, and even political unrest. So ahead of us, we have a labor market dominated by uncertainty and fragility. And at the end of the tunnel is not exactly in sight yet. The whole world is striving for answers and looking for promising sectors and opportunities for a resilient and sustainable post-pandemic recovery. We at UFM, we are mobilized. We are pulling together our resource capacity and also mobilizing our partner since day one, because we are aware of the magnitude of the challenge ahead. But we are also firmly convinced that there are reasons for hope and there are opportunities in the aftermath of the pandemic. Because, as I always believe, behind every crisis, there lurks an opportunity for those well-positioned to grasp. As you know, the southern Mediterranean countries are lagging behind in terms of financial development. And you said it yourself when you were referring to experience sharing with the northern Mediterranean. And we are also lagging in terms of financial inclusion. And this was further aggravated by the current pandemic, which further deepened the already existing socioeconomic disparities. So the need for promoting financial growth and access to finance becomes even more pressing in this context. And it is precisely because of this crisis that the role of credit guarantee schemes assume a whole new dimension as a building block in any sustainable recovery scenario. So EMGN's institutional architecture and its 4 pillars of research and development, training, advocacy, and dissemination places it in a privileged position to contribute to ensuring the business continuity for all our enterprise, micro, small, medium, what have you, in the region, and to alleviate the region's structural constraint in access to finance by gathering guarantee schemes that are active in the country of our region. I mean the Euro-Mediterranean region, of course. So our engagement with you, with EMGN, is not the brainchild of the COVID-19 emergency, but rather something anchored to our working methodology and our multi-stakeholder approach as we work on our areas of priority. Last year, together, we co-organized here, the UFM, a workshop on credit guarantee schemes in the Euro-Mediterranean region on September 16, 2019. We did that with IEMed, who is with us today, EMEA, and of course, your partner and ours, GIZ, supported by the German Ministry for International Cooperation, BMZ. And I'm confident that the future prospects of collaboration and building synergy, as you just mentioned, will inspire even more joint endeavors in the immediate future. When we contemplate the financial market in the region, and especially in the MENA region, we immediately take note of the work that needs to be done to bridge, as you mentioned, the knowledge gap in our enterprises' access to finance and in disseminating knowledge on guarantee schemes so we can be able to enhance the operating environment of those schemes and support innovative financial solutions in our region. So this first edition of the EMGN annual virtual conference, unfortunately virtual, is much welcome step towards discussing ways of empowering and reinforcing local and regional credit guarantee schemes. At the UFM Secretariat, we are looking forward to your insight and ideas as we take note of the deliverable and the takeaways that will emanate from today's sessions, and think of ways to translate them into action in collaboration with you and all of our partners. Having said that, I look forward to you submitting this project eventually, and I will be supporting for labeling under the UFM umbrella, if I may say so. And I'm saying it officially because I told you yesterday on the phone, I will be more than happy to support your drive to make this initiative part of the network of UFM activities in all the priority sectors that we work on. And I actually consulted with my EDE division, Economic Development and Employment Division, and they are very much in support of what you just mentioned. So I will stop here, and without further ado, I will wish you all a very good day of exchanges, discussion, and I thank you for giving me the privilege and the honor, and I salute you again, Dr. Nagla, for your dynamism and energy in supporting this initiative. Thank you very much.
Thank you, Ambassador Nasser. Actually, it was really your support and encouragement, is behind, and I assure you about the labeling. Yeah, it's in our agenda. Yes. Yeah, thank you very much. Ambassador Nasser, as usual, he kept actually saying all these encouraging words to us, and we thank him very much. And soon we will be coming to UFM for labeling. Now we'll move, to the second part, of the day that has to do with the real technical sessions. And I would like just to put the introduction for my colleague Roger, to take it from there, because as we said, with the COVID, what happened during the last 11 months actually, it was a very unprecedented. It was kind of the biggest maybe crisis we met in our generation. It was very different. We said nobody could expect what happened with the COVID and the effect of it. The very good thing actually that happened, that most of the policymakers across the whole globe actually, they were fast. They took the action, and they started actually to take effective decision to meet these unexpected drop. This actually crisis was associated with clear potential of high recession that is expected and effect on the financial market that we can all see. Within this, actually, we've seen as the guarantee scheme, it was very clear that the policymakers, central banks, governments, Ministry of Finance, going through this very exceptional high risk, they had to take very exceptional policy responses. And we cannot say surprisingly, but it's just another confirmation of the role of this instrument of risk coverage, mitigation, or sharing, the guarantee scheme, proved to be the core of most of the decisions, of the whole policymaker across the world. They were all targeting to secure liquidity in the financial market, all targeting, to continue the flow of credit, how to meet the fragmentation risk, and the tool to do that was the credit guarantee scheme, which put on us a serious challenge and serious burden and load that we have to think out of the box across the board. We have to come with tons of products. We have to think differently. We have to constantly create and engage and get new ideas. And we have to do that because this is our role. The role is not going to stop with what we did during the COVID. It's now actually what's after the COVID, what we are all thinking about, because, okay, this will not disappear in a year or two. It's not expected actually that what we're facing now will just in a year will end. Accordingly, this recovery timing and this recovery policy, which is after COVID, it should actually secure kind of favorable financing position that requests more involvement from the guarantee scheme, to meet the whole expectations and requests by policymaker and government. And here actually we have to take it to our colleagues, from Roger, from IEMed, and our colleagues from the different schemes. Actually, they will share with us what are we going to do after? What do they have in mind? We're still challenging ourselves, brainstorming, talking, and doing lots of things. Roger knows. Until last night, Roger, we were over the phone, and maybe this very early morning, actually. So we're really sharing, talking nonstop, So Roger and our other colleagues, Virginie, Jafari, Beatrice, and the others, you will be welcome on board. I'm so happy to see you virtually. I would have loved to see you actually here in Egypt, because it was really planned to be here in Egypt with sunny Egypt, actually. Because let me show you here, it's really the sun over there. I don't know if you can see it. It was expected to be in Egypt, this meeting. Unfortunately, it's virtual, but I give you some sun. Roger, you can go ahead.
Thank you, Nagla. Thank you very much for your enthusiasm and your dedication, and a warm welcome to the UFM Secretary General, to all the representatives of credit guarantee institutions and schemes, to the representatives of international organizations, international financial institutions, as well as other attendees who have decided to join us in this ever-first annual conference of EMGN. I am delighted to moderate this first session with so many prominent speakers, our dear panelists, which I will present to you right away. On Friday last week, ministers of foreign affairs of the 42 countries of the Union for the Mediterranean convened at a ministerial conference with the aim to reaffirm its attachment to the cooperation in the Euro-Mediterranean region while commemorating the 25th anniversary of the Barcelona Declaration. And among the many and the main priorities for action that were jointly envisaged by the ministers, there is the need to foster sustainable and inclusive economic development that creates long-term employment in the region and enhances SME development that helps recover our Mediterranean economies, and particularly what Mediterranean credit guarantee schemes do at this very moment. And we do it at the crossroad with lots of uncertainties in the horizon, with the COVID crisis. Interdependencies between the northern and southern Mediterranean have accelerated in a number of fronts. The unprecedented self-inflicted recession as a result of lockdowns and restrictions over the economic activity requires a more coordinated collective response. We need to use every possible dose of multilateral and regional cooperation to pursue this collective response, because both states and societies have tremendously weakened in the struggle against the global pandemic. All the countries in the region have deployed an array of health, fiscal, monetary, and financial policies to mitigate the impact of the pandemic, as it was highlighted by many credit guarantee schemes during the first EMGN webinar that took place in April this year. First and foremost, fiscal policy has been used to soften the blow to households and businesses, while fiscal packages in the region, including off-budget measures, have been significant. In terms of revenue measures, these have included exemptions from rents and property and land taxes, deferrals or exemptions on declaration and payments of individual and corporate taxes, and suspension or reduction of various government fees and penalties. In terms of spending measures, the latter have focused on strengthening unemployment benefits, cash transfers to low-income households, subsidies to SMEs, and in parallel, nearly all countries in the region have boosted the health sector's capacity. Many governments, through credit guarantee schemes and public banks, have provided subsidized and rescheduled loans to SMEs, businesses in hard-hit sectors, and cash assistance to low-income households and informal sector. In their turn, central banks in the region have also deployed monetary and financial policies, including unconventional tools. This set of measures aimed at compensating the effects of an economic crisis that is impacting over millions of people in the region will be followed by recovery plans that have been announced by almost all governments in the Mediterranean region. For the governments of the north of the Mediterranean, these recovery plans will intrinsically linked with the deployment of the multi-billion Next Generation EU plan. One of the key questions that I will revert to our dear panelists is how Mediterranean credit guarantee institutions can increase their role in the recovery path. To what extent this set of plans will be used to boost sustainable and inclusive growth in the region, for which we are so desperate in need of, especially in this part of the world. Is really this post-COVID era a turning point that goes beyond the rhetoric of greening the economy? Because I clearly see some contradictions between the urgency by governments to take care of certain immediate necessary measures and some mid to longer term reforms that are crucial to transform our economic models. Finally, what kind of cooperation between international, regional, and national authorities, international financial institutions, and credit guarantee schemes are needed to execute future recovery plans? To answer to all these questions and others, I'm very pleased to introduce our panel today, which is composed by senior representatives from Southern and Northern Mediterranean credit guarantee institutions, as well as from the European Commission and the European Investment Bank. I will start with the first panelist, Mohammed Al-Jafari, who is the General Director of the Jordan Loan Guarantee Corporation, and since November, I was there, so I can certify it. He's also co-coordinator of the Global Network of Guarantee Institutions. Mohammed Al-Jafari, you have the screen.
Well, thank you very much, Roger. Thank you for the very generous introduction, and thank you very much for the overview that you have presented. And I'm glad really to be with you today to brief you about the specific policy measures that were taken here in Jordan to deal with the pandemic. Jordan, as you all know, is a small, relatively small, open economy. The average growth rate over the last 10 years was only real 2.4% for the last 10 years. We have alarming budget deficit prior to the crisis, and we suffer also from a chronic current of payment, current account deficit in the country. So with these economic challenges, Jordan was severely affected by the COVID-19 pandemic, with a very limited room to maneuver and very limited fiscal space. The measures taken by the Jordanian government to deal with the pandemic and to mitigate the impact of the pandemic on several economic activity focuses mainly on maintaining as much as possible the jobs of the Jordanian people. Prior to pandemic, Jordan has an unemployment rate the highest in history. It was 19% of the total workforce. By the pandemic, this unemployment rate increased significantly to be close to 24%. which is really the biggest and the toughest challenge that the Jordanian economy is facing. Steps that taken to deal the pandemic and to contain the impact, the economic impact of the pandemic on several economic sectors with the health measures taken. From the government side, they couldn't really do much based on the limited budget and the high level of the deficit that we have in the prior to the pandemic. What has been conducted here in Jordan, we used mainly the redundancy fund of the Social Security Corporation, and we used that to provide salaries to those people who left their jobs or those who partially employed, providing them with monthly salaries for something around close to the minimum wage. The minimum wage in Jordan is 220 dinars or something close to 300 USD. So we made sure that at least if they lost their jobs, they find something that is really a grant or a subsidy that is really very close to the minimum wage in the country. That really covered the workers who left or lost their jobs for 3 months. And currently the government is contemplating the extension of this program for another 3 months. Also, there was some measures, actually a lot of measures that were taken by the Central Bank of Jordan. The Central Bank, the first thing it did, it reduced the required reserve on the monetary policy as a monetary policy tool to the lowest level possible according to the existing regulation, which released something about 550 million JDs, about $800 million as additional liquidity that banks can use to lend their customers or help them postponing the payments of the loans for their customers. Also, the central bank has reduced the interest rate on all monetary policy tools by 150 basis points. And the interest rate currently prevailing in the market is the lowest in history. And I think the central bank and Jordan is not really an exception in this regard. Interest rates that are prevailing worldwide are the lowest in history. And this is the best that we can do. It's even closer or zero in many countries, which really the maximum that could be done to stimulate spending in general, whether we talk about investment spending or consumer spending. The central bank also has asked, even mandated, banks to postpone the payments on the loans provided to retail borrower for 3 months. Then it opens the window for banks really to postpone additional, to make additional postponement of the installments for those affected, for those particularly for those affected by the pandemic. Again, that helps them to make some really relief on their financial obligations. The most important steps that was taken by the central bank is the so-called the COVID-19 lending and loan facility, which was about 500 million JDs, about 800 million USD. By the way, the total value of monetary policy intervention is about 2 billion JDs, which is about 8% of our country's GDP. This particular program was directed to the SMEs with a total loan, with a maximum loan value of 1 million JD, Jordanian dinar, which is close to 1.4 million USD. The amount, the money were provided by the central bank to all banks operating in the country free of charge on lend to SMEs. But the central bank put a cap on the maximum lending rate from banks to SMEs. That cap is 2%, so they can lend at a maximum lending rate of 2%. This facility covers all economic sectors operating in the country, but subject to the definition of SMEs. This particular facility is augmented by a loan guarantee component. The JLGC was part of this initiative. We cover the loans extended under this facility with a coverage rate of 85%. This is the highest coverage rate that we have ever provided. The facility proved to be very successful. The total amount of commitment made by the banks so far is close to 460 million, with a guaranteed value. The amount of the loans that we have guaranteed so far is close to 400 million. So we're very close, really, to achieve the targeted amount. However, the central bank, in the last meeting with the commercial banks operating in the country, was very flexible and sent a message that if there is more need in the market for additional credit facilities, the central bank stands ready really to extend the amount of money provided under this facility. The facility, however, all the loans under this facility, however, are provided to meet only operational expenses, not meant to meet any investment expenditures or any expansion or any expansions in the businesses. We allow the borrowers to use the money to pay their bills, to pay the salaries, and to buy any operational or working capital for their businesses. So the main policy objective for this facility is to make sure that the SMEs keep running and keep the jobs for their employees as much as possible. Based on the estimates that we have made so far, the facility enabled the Jordanian economy to maintain at least 62,000 jobs in the market. Without this facility, it wasn't really possible really to keep workers, to keep going on, and to pay the salaries for the people to keep going. So I think this facility was or could be the most effective policy tool taken in the country to deal with the spread of the pandemic and really to mitigate the economic and the social impact of the facility on different economic sectors. I think with the measures mentioned, the role of the credit guarantee system is very clear, and it shows how important the loan guarantee system could really support the policy initiatives taken to support small and medium-sized businesses and to really to maintain or to cut down the possible implications of the pandemic on the employment and poverty levels in the country. At this stage, the Central Bank of Jordan and JLGC are working on another facilities that could be directed to the microfinance companies. We feel that our first program that was directed to small and medium-sized companies helps them, but left the unbanked micro businesses without the proper coverage or without having the right or similar facilities to keep them going. So we're working with the Central Bank of Jordan and with the technical support from GIZ and generous support from the World Bank to design a new program that targets the unbanked segment of the micro businesses in the country. The amount of money that we really target to lend is close to 50 million USD that will go to these small micro businesses. Average loan size is expected to be about 5,000 to 7,000 USD. all the loans will be provided through the microfinance company. But
Dr. Al-Jafari, one more minute.
Yeah.
Thank you.
How long?
1 minute.
1 minute. All the loans will be provided from the central bank to microfinance companies on lend to the micro businesses. But again, in terms of mitigating the risk and encouraging the microfinance companies to lend the money, we will provide the same coverage ratio of 85% of all loans will be provided under this facility. So in summary, what I have presented shows how critical and how important the role of the loan guarantee systems in really encouraging the money lenders, the loan providers to lend and to support micro, small, medium-sized businesses during the very tough times. Without these facilities, they will be perceived as excessively risky businesses, and they won't be able to obtain the targeted level of financing to keep them going and to keep the jobs in the market. Thank you very much for giving me the opportunity to speak in this important event, and I'm really glad to take any questions, if any.
Thank you very much, Dr. Al-Jafari. You gave us a very comprehensive picture of how these support mechanisms throughout this pandemic year that we are living have actually worked in Jordan, and I'm sure we'll get back to you with questions and comments. Let me remind you that we have an interpretation service working simultaneously in English, French, and Arabic. You can find it in the interpretation function of Zoom. And now we move to our next speaker. Je donne le cran à Tahar Ben Hatira, qui est le président et directeur général de la Société tunisienne de garantie en Tunisie, Sotougar. Monsieur Ben Hatira, vous avez la parole, vous avez l'écran.
Bonjour à tous, merci Roger. Je suis très ravi de vous rencontrer et de vous retrouver. Donc, après la présentation, بعد التقديم تاع الأستاذة نجلة اللي أشكرها et l'exposé de Dr Jafari sur الوضعية بالأردن الشقيق. الوضع ما يختلفش. La situation donc n'est pas très différente par rapport à la Jordanie. Donc, الحكومة والسلطات التونسية انطلقوا في إعانة المؤسسات والأفراد. بالنسبة للمؤسسات، الحكومة سرعت في تعويض للمؤسسات بشتى الطرق. سرعت في إرجاع فائض الأداء بالنسبة للمؤسسات اللي عندها فائض عند الإدارة. في نفس الوقت أرجعت خلاص الأداءات والحاجات الاجتماعية. في نفس الوقت البنك المركزي أصدر منشور في إرجاء خلاص القروض لمدة 10. كما لين معناتها شروط إعادة تمويل المؤسسات. بنفس الوقت خفض في نسبة الفائدة المديرية، ووضع كذلك خط إعادة تمويل خصوصي للمؤسسات المتضررة. كل هذا في وضع اقتصادي صعب. العطالة العمل للشوماج مع البطالة تجاوزت 20%. عجز الميزانية في آخر 2020 سيصل إلى 11.4 مقابل 3.4 في سنة 2019. في هذا الإطار يعني الإدارة وضعت الإدارة آلتي ضمان دو جارانتي في واحد معناتها آلية مخصصة للمؤسسات، وآلية ثانية مخصصة للمؤسسات العاملة في القطاع السياحي. دونك الآلية جعل لضمان قروض الاستغلال 25% من رقم المعاملات في سنة 2019 مع سقف بحوالي 1 مليون دينار تونسي. عندما أقول 1 مليون دينار تونسي حوالي 250 ألف دولار أمريكي. القروض هذه جاءت لتغطي حاجيات مصاريف العمالة، المصاريف الاستغلال، على أن يقع صرف هذه القروض من مارس 2020 إلى ديسمبر 2020. بلوكي إلى ديسمبر 2020. بالنسبة للقطاع السياحي المدة تصل إلى 31 مارس 2021. القروض هذه قررت الحكومة أن تمنح بفائض لا يتجاوز نسبة السوق النقدية مع 1.75. نسبة السوق النقدية مع 1.75. بالنسبة للشركة التونسية للضمان معنا هيئنا معناتها اتفاقية مع البنوك بموجبه أسندنا لهم تفويض في التصرف في هذه الآلية، والآلية هذه وقع معناتها العمل بطريقة لا مادية. n'est pas dématérialisé. Voilà. إذا بعد هذا هو إجمالي الإجراءات Ce que nous avons tiré comme expérience ou comme enseignement هو الآلية اشتغلت بطريقة فعالة، وآليات الضمان يجب أن تشتغل في وقت الأزمة كآليات مضادة للأزمة يجب أن تشتغل.
And anti-crisis mechanisms should as well be working. We noticed that there is a need to speed up the procedures to depend on the non-materiality of the transaction. As for the post-COVID period, we need to resume and give assistance and help. So, and there will be a restructuring. In the company, we are about to a new mechanism. We were thinking about this mechanism since 2018 with the support from the World Bank. And actually, it expands the scope of intervention, improving and enhancing the method by which files will be accepted, and giving the claims and compensations in a quick and faster and more efficient manner. It is expected in the first, we will start in the first half of 2021. Also, we have another project guarantee for housing loans. The actually and this loans for residential buildings and houses guarantee. And we think that at the beginning of the year 2021.
One more minute.
Doctor, you have 1 minute left. You have 1 minute left. And we think the tourism sector was most affected. And we will resume till March 2021. Regarding those mechanisms, there is a concern from some of the donor agencies to support the company to actually enforce such mechanisms ASAP. And this means, this is in total all what I can say in this regard.
Thank you so much, Dr. Tahar. Again, I'm sure that there will be some questions regarding the many points and valuable points that you raised, and we thank you very much for joining us this morning. But we have to move because time, as usual, and as it always happens in this format, is constraining. And our next speaker is Virginie Poncet, who is the head of international expertise activities at BPI France. We're very honored that she decided to join us. I know that she has a PowerPoint presentation, not a long one. Virginie, the screen is yours if you want to share the PowerPoint presentation. Thank you.
Thank you very much, Roger. Can you see the presentation?
Yes, we can see it. It's okay. Perfect.
First, I want to thank you to let me be around this table. It's a great honor and a great pleasure to be with all the friends and the very honorable speakers, and I'm honored to be among them. So I would try to be very quick, speaking about BPI France action in the COVID-19 crisis. If I can activate. So the measures that were implemented in France, like anywhere in Europe and in the world and in the countries, as already Mr. Al-Jafari and Mr. Benhatia just said, were sanitary measures, regulatory measures, and the hardest was being the lockdown. And we have been severely locked down and still are. Social measures, sorry. Of course, many social measures have been taken by the French state for training, temporary unemployment and employment benefits, subsidy to the poorest, training for unemployed. So many social measures have been taken, tax measures as well, some tax relief and postponement of due tax, and of course financial measures, and this in particular in targeting enterprises. And those financial measures, among the financial measures, most of the financial measures that were targeting enterprises were managed by BPI France. So, and what we did, of course, we have many, as most of you know, BPI France is not only doing guarantee, but it's also doing lending and export guarantee, export credit, and also equity finance. All the activities have been under pressure since the very beginning of the first lockdown. We have extended the loans. We have put a moratorium on all credits, so we did not perceive any installment during the first lockdown, and this moratorium was extended. And as for the guarantee, we had this massive public guarantee scheme to cover the loan given by all the banks in France, and this was called the Prêt Garanti par l'État, the PGE, guaranteed loan by the state, and the guarantee was up to 90%, which was absolutely not our usual rate. Our maximum guarantee coverage is usually up to 50 and exceptionally to 70. 90%. We used that tool as well in the 2008 crisis for treasury purposes only. So it was rather on a smaller case than now. And this Prêt Garanti par l'État was disbursed by all the banks at cost, and it was massively followed by all the banks. And as of today, we are we have disbursed 100 million euros of, as of September, we had 100 billion euros disbursed. I don't have the figures as of today, but the target is that it will be extended to probably almost 150 billion, which is absolutely massive. And of course, for all the other grantees, we have extended the coverage, the eligibility, and of course, all the restructuring of loans, and many have occurred, have been done without fees. So that was the great activity on guarantee, and BPI France has been very under very high pressure during all these past months. And of course, we also increased the export credit insurance for exporting companies and short-term credit insurance. The impact of these actions actually were not measured. We have an evaluation team, but they usually require 2 years to measure the actual impact. 100 billion euros definitely must have had a strong impact on saving jobs, on maintaining companies afloat, but it has not been measured yet and will not be before some time. What we just know now is that all our tools, all the proposed tools, have been really extensively used, and they were necessary. I mean, the economy is strongly impacted. 10% decreasing is forecasted for 2020 in France, and yeah, this is heavy, and it will take time to recover from that. Still, recovery is of course in all our minds, and BPI France has done its work for the recovery plan. Well, first, the EU has set up a recovery plan, which is absolutely fabulous for all member states, and also associated members, I guess, but the next speakers are going to speak about that far better than I could do. And of course, we in France will be benefit from that huge recovery plan. And we have in France 3 major axes for that recovery: green transition, competitiveness, and social and territorial cohesion. And BPI France has structured its plan, its recovery plan around the major axes, which are ecological transition. Well, of course, we follow the major French plan. We have also a strong, BPI France has a strong mission to support innovation, and innovating companies have been also seriously hit in their innovation program. So we also, there's a strong plan to make sure that all the innovators have the capacity to cross this terrible period. So innovation and support innovation in deep tech startups is also very important. And as I will say in the next slide, we also have some particular targets like aeronautic and And industry is also a strong concern of BPI France, and we support the industry as much as we can. And we also mobilize the social cohesion fund for very small enterprises. And we have this scheme, which is not, well, it's a bit on the side from the guarantee funds, is that we support green volunteering young high school graduated to work in territories, and we support them. And what we have done is that we have, as in the previous period, we are extending in all the grantee schemes, we are extending the eligibility, the coverage. We are trying to deploy that, and I won't list all the list of tools that we are in the process of designing or that we have already designed. I will be very pleased to share that with those who want some information. But mainly these new tools, they are linked. Well, not all of them, but some of those strong tools are linked to the plans we created, the recovery plan, the sectorial recovery plan. As Mr. Al-Jafari and Taha just said, tourism, the nightmare is still here, and we are still in the middle of it. We will need to support tourism enterprises very heavily for the next year.
Virginie, one more minute, please.
Okay. Automotive plants, same thing. Aero plan, same thing. So the creative industries also will need a strong support, and the innovative startups. I wanted to add that we did some study on what is going to change. I mean, and how the enterprises are facing the crisis. So there was the phase one, first confinement, March, June. Then they have had their phase two, how the enterprise are changing their operational decision, and in phase three, and we are right in there in the strategic decision. And those strategic decisions, they all turn around those 9 mega trends we listed here, 5 being not completely agreed upon by all, but in the process of being so, and the 4 next being definitely shared by everybody. The 4 agreed one being safety and health, 4 digitization, flexibility and resilience, new relationship to space, and then of course the 5 first one: climate, reasoned and reasonable consumption, autonomy, sovereignty, new modes of cooperation and solidarity, and quest for meaning. And these mega trends are taken into account in all our strategic plans and all our product design. And as a conclusion, I want to stress the fact that this big prêt garanti par l'État, this 100 million that have been injected into all French enterprises, could not have existed without the strong collaboration between banks, the BPI France as a CGS, and the state. I mean, this collaboration is key was key to save the enterprises for the year to come, at least. And this collaboration will be key for the next 2 to 5 years to follow up the recovery plan. The second collaboration, which is of very, very, very great importance for us, and I hope that the 2 speakers who are going to talk next to me will confirm that and will say that it's also important to you is the EU. I mean, the EU support, financing, all the discussion we have in creating the tools, in improving the tools, and in our future plan, the EU is next to us. And the last one, I think for the region, the Mediterranean region, EMGN is very important as well. And the fact that we speak today is important for all of us. And I think that this collaboration is key, and especially to work on those mega trends. And I would be very pleased to participate to any working groups around those mega trends and how we can support them in our economy.
Thank you so much, Virginie, for again a very comprehensive presentation. We know that France has been one of the most supportive countries to the economic tissue during this process, and BPI France has, of course, been the backbone of this process. But thank you for also sharing your priorities ahead of the recovery plan that you will implement, and for the final tips that I have actually noted down because they are very interesting. We move on now with our next speaker, who is Malin Elander, who is a program manager at the Directorate General for Neighborhood and Enlargement Negotiations in the European Commission. As you know, during the last year, from the side of the coordinating unit of EMGN, we have actually tried to to make EMGN project aware to the European Commission, and in particular to both DG NEAR that works with the southern Mediterranean countries, and also with the European Investment Bank, which will come later, of course. So Malin, we are very honored for joining us, and you have the floor now, or you have the screen. We better say you have the screen.
Thank you very much, Roger, for this introduction. I'm very honored as well to be part of this first annual conference of the Mediterranean Guarantee Network. And I'll take the opportunity to speak briefly about how the European Union has worked the last months very closely together with our European financial institutions to reorient our guarantee schemes towards to respond to the COVID-19. We have also done that through different blending mechanism where we blend our grants with the loans from European finance institutions. And I think this has really been instrumental in this context. I would first of all like to put my presentation in a global context. And I know you, Roger, and also Mr. Kamel, you made reference to the last week's celebration of the 25th anniversary of the Barcelona process. My masters and representatives of the southern neighborhood countries kicked off there a reflection and a consultation process for a more strategic and ambitious partnership with our countries and between our countries. And this consultation process will feed into a joint communication on a renewed partnership with the southern neighborhood, which will be adopted by the Commission in the beginning of next year. And this will also focus on an economic development strategy. And my commissioner, Barelli, is in close contact with your governments to shape this plan and hear about the major priorities. And of course, the aim of all this is to set a positive agenda to ensure that this partnership is more relevant to face the current challenges and seize opportunities, because everybody knows that we stand in front of major challenges that we need to respond to and we need to confront, including measures to foster green and digital transition and to fight climate change. And also to develop an economy that works for people and that attracts quality investment and creates more inclusive economies. And for us, the way to do this, among other instruments that we have, is of course through a guarantee. The key tools is the European Fund for Sustainable Development Guarantee. We have just started, we have the one which is now running and which we started in the beginning of 2018, 2019. But we are now working on programming the next one, the so-called EFSD Plus. So it's the European Fund for Sustainable Development Guarantee Plus. And my work the last month have been really to be in contact with our delegations to understand what the priorities are and really to understand how the dialogue is between the delegation and the partner countries' governments. All our delegations have obviously highlighted the deteriorating situation of the country's economies with limited fiscal space and combined with a very high public debt. And also in certain countries, combination with a very low absorption capacity for ongoing investments. So we really need to reflect on how best we can use our guarantee to do this. I hope you can see the screen. So I will start just to make a short presentation of where what this EFSD Plus guarantee is. It is in fact very much embedded in the financial instrument which will be established now under the multi-annual financial framework 2021 to 2027, and this is called the Neighborhood Development and International Cooperation Instrument, the so-called INDICI. So this will replace the European Neighborhood Instrument and also includes instruments for other regions. So we will continue to work very closely with European finance institutions and especially European Investment Bank to support public and private investments aligned with the priorities of the EU and its partner countries. And we will do this according to what we call a policy first approach. And this means that the Commission, of course, needs to formulate the strategic priorities and the priority objectives first. And then secondly, we will see how we can implement them. Guarantees and loans are not the only way to do that. There will obviously also be grants and technical assistance, but I'm now focusing on the guarantee. What is a little bit new also in the next multi-annual financial framework is how we will, what type of investment this will translate into. There will be sovereign, sub-sovereign and private sector operations. And I'll go into that a little bit later. So this time the guarantee is much larger and much wider than its predecessor. The predecessor is focused only on the neighborhood and the sub-Saharan Africa. The EFSD Plus will include all the regions in the world, so also Latin America and Asia. It also has a much larger capacity. We will have a guarantee amount for almost 46 billion. And it has two parts. It has an open architecture where all the European finance institutions can, and also international finance institutions can participate. And then it will have a dedicated part where only EIB can make the operations. And this is a sort of a replacement of a guarantee that we have since long time with the EIB, which is called the external lending mandate. But we haven't been, the Commission has of course provisioned that guarantee, but we haven't been so much involved in the operations, but we will be now in the future. So we think this is a very efficient way of implementing external cooperation, because the guarantee is only partly funded via provision for losses, and it also crowds in private sector financing when this is possible and necessary. Of course, sustainability is in the center of our operations. So one of the key objectives of the guarantee is to create jobs and also focus on an inclusive economy. We will also create and improve market structures through private sector financing and incentivize sustainable project structure and work with existing mechanism where this is possible. And here, of course, it comes to my mind the network that you have just set up, and I think absolutely we should start rather sooner than later and see how we possibly can work together through the international finance institution. So I guess this is a topic that we could probably develop a little bit more during this session or even after. It covers different risks, both public and private sector risk, this guarantee, like political risk, such as expropriation, but also commercial risk to englobe or include more risky groups which cannot fulfill collateral requirements, for example. So it is a remunerated guarantee according to expected losses, and it's unconditional, irrevocable, and on a first demand guarantee, as the European Commission is considered to be a AAA institution. It covers mostly defaults, but can also be tailored to cover specific risks also. And as I said, is provided through eligible finance institutions which need to have undergone a certain assessment by the European Commission, the so-called pillar assessment, and that's why we cannot work with whatever institution. It has a portfolio approach, meaning that we are not going to do one guarantee for one country. We are going to have horizontal or thematic guarantees which spread over different regions, but can also be concentrated to one region, but it should be a number of different operations. So as I said, this guarantee can support three different types of investments. We have the sovereign, so state-funded investment for more strategic infrastructure projects, and also non-commercial sub-sovereign investment. And here EIB has the exclusivity to implement of investments. We have also sub-sovereign for more commercial, but can also be, of course, commercial sub-sovereign, but this is should be used for municipalities or regional entities, and also public banks and companies with which may have a public mandate.
Malin, you've got 1 more minute. Thank you.
Okay. Then I rather skip this, and go immediately to just give you provide you a couple of examples of how we have been responded to the COVID-19 with the current guarantee. We have done that by refocusing almost 800 million of our guarantee scheme to the coronavirus pandemic, and targeted specifically small business owners and with a focus on women and youth, but also concentrated on healthcare, especially testing labs. So we have a couple of or we have more guarantees, but this is just an example of one, Nasira, implemented by the Dutch FMO, which has done operations among others in countries in Jordan, and which really focuses on young female and migrant entrepreneurs. There is another guarantee which is called the European Health Platform with EIB, where we support the reduction and the removal of financing constraints for accessing vaccines and health diagnostic services. And here we have supported this with a 438 million big guarantee. I don't want to take too much time, but I can go into details, more details if you are interested. And I also very much invite you to consult our site on the guarantees, which is called the External Investment Platform.
Thank you very much. Thank you very much, Malin. You touched upon the issue we wanted you to touch upon. So I thank you very much for such a detailed explanation of how the EFD plus guarantee program actually works and will work, and especially to address one issue of concern for us, which is how can national guarantee schemes and networks benefit from such a program. So I'm sure that that this presentation will actually lead to further discussions at the bilateral level. And now, without further delay, we will move to our last speaker, who is Johan Chenot, who is a senior institutional and policy affairs officer at the European Investment Bank. Johan, the floor is yours.
Oui, bonjour. Bonjour, j'espère que vous m'entendez.
Morning, can you hear me? Yes, I can. I work for the Institutional Affairs Department in the European Investment Bank, and we wanted to participate in this meeting. This network is so important in the current context, since we are doing the same diagnosis or delivering a similar presentation to all the presentations delivered by my previous colleagues on the status quo of access to finance and credit guarantees to support small and medium enterprises have access to loans and finance in the absence of any compensation mechanisms, especially in this crisis, especially with the difficulties they are facing with their budgets. The European Investment Bank, due to the fact that I have a short time to give my presentation, I'll try to be brief. We have a long experience regarding these mechanisms for credit guarantees and loans. Regarding the strategic investment in Europe, we used these mechanisms in a wide range. We have an investment fund, and this was the first mechanism used in 2015. We have signed with the European Bank agreements to provide loans and guarantees to small and medium enterprises. To give you some ideas, this had a great impact on funding these enterprises because out of 3.5 billion loans, 49 billion of these loans were given to them. The small and medium enterprises in Europe, and they were 48 institutions that were able during the crisis and post-crisis period to benefit from this mechanism in a way that enabled them to develop their work during this crisis. We also developed some tools with the European Union and the Commission of the European Union. It's another mechanism that has a group of tools for the loans and the guarantees that were used by European countries. And they were also extended to Tunisia during the first phase of the program. So during the pandemic, we're able to get out of all these major difficulties faced by the institutions since the beginning of the pandemic. We started communicating with different partner countries and the financial middlemen and mediators, and the world, and also the European Bank has invested in the framework of the European Union to have an investment bank with a value of 5 billion euros in light of the European mechanisms. It provides support through loans, and there are also other mechanisms that we are negotiating right now, be it in the framework of the European Recovery Plan. And we will go on increasing these mechanisms in the Mediterranean region. There are a number of elements that were used before, and we developed them further as we developed some mechanisms for partial guarantees and partial loans, as well as portfolios to be used by banks and others. And these are all mechanisms that give us the opportunity to provide guarantees for credit lines for a big company, small or medium enterprise. To give you an idea, during the FC period, the guarantee could be millions of euros according to the size of the enterprise or institution. And this applies in particular to small enterprises. And in fact, these mechanisms were able to support these companies and enterprises to go on. And through this program that was delivered by my colleague in the European Commission, the percentage of loans for us give us the opportunity as the European Investment Bank to participate in putting such financial programs annually. So we put these mechanisms to support the enterprises and provide them with the loans needed. So our participation in this network is so important, and we wish that we'd be able to continue our dialogue with all other participants. Thank you very much. Thank you, Johan. Thank you very much for your presentation.
Between EMGN and the European Investment Bank. We now come to the end, even though there are like several questions, some of which have already been answered by the speakers directly through the chat. This is one of the advantages of using this kind of applications, that you can basically ask questions and get almost simultaneously the answer. But there was a question for those who cannot read the chat. There was a question on whether a counter guarantee instrument was eligible under EFD plus, and Malin answered that yes, it is possible to counter guarantee through the EFD plus. Then there were several questions regarding how can like national guarantee institutions actually benefit from this mechanism. Malin answered that that they need to do it, or they need to go through an international or a European financial institution. So there, the role that the EIB or the European Investment Fund can actually play is crucial, is key. We also have a question from Jose Fernando Figueiredo, who is also co-coordinator of the Global Network of Guarantee Institutions. The question is, if an African country wants to create a credit guarantee institution, what is the kind of help it can apply from EU cooperation programs, for example, to raise initial capital? And second, if a network such as EMGN wants to promote a counter guarantee mechanism to support its members with a partial coverage of the risk they assume in their portfolios of guarantees, how could the EU collaborate in the launching of such a fund? So perhaps both Nadine and Johan, you could answer to the question of Jose Fernando Figueiredo, if you wish. Malin, are you there? Hello? Okay, Malin doesn't seem to be there. Maybe Johan, would you like to add?
Sorry, I am here.
You're here, sorry.
Yes, sorry. No, it's a very good question, and I think we could support that, but probably I mean, it needs to exist before, and there are certainly possibilities to help to set it up through technical assistance. Now, I'm speaking on behalf of my colleagues working on Africa, which is not the same Director General. I'm representing DG NEAR, but this is, I think, would be a possibility. But then when it comes to the funding and the structure, that I think it's another question, and a question which is long term. So I would say that probably technical assistance or expertise could be provided to help setting up the mechanism. But this is to be confirmed also by my colleagues working on Africa, and they are not represented today. But if you contact me directly, I could probably get in touch with them.
Excellent. Well, thank you so much, because other people also ask for the presentations. These presentations that have been used during this session will be uploaded on the website of EMGN, which means that you can access them. And as I can see that some of the upcoming speakers are already connecting to the session, and I don't really want to, and I want to stick to the time that was allocated to this session. I will conclude here by thanking everybody who took part in this session, especially thanking the speakers. We had very interesting presentations that touch upon the two the two main issues that were at stake. On the one hand, what kind of measures have public sector and specifically credit guarantee schemes in the southern Mediterranean, and also we saw the case of BPI France from the northern Mediterranean, have put in place to counteract the effects of the COVID-19, and on the other hand also what kind of programs and initiatives are in place in order to lead and move towards the recovery path and the recovery plans that many of both northern and southern Mediterranean countries have actually put on the table. We also complemented this very interesting vision with the explanations and the presentations of the two, let's say, regional and European institutions that we normally work with, the European Commission and the European Investment Bank, which have greatly contributed to the debate. So without further delay, I would like to thank the participation of all the speakers, all the questions we had in the air. And now I'm happy and pleased to hand over the floor and the screen to Dr. Rim Ayadi, who is the president and founder of the Euro-Mediterranean Economists Association and one of the pillars of the coordinating unit of EMGN alongside GIZ and IEMed. So Dr. Ayadi, the screen is yours.
Hello, good morning, everybody. Do you hear me?
We hear you, perhaps a little bit low, so maybe you could get closer to the micro.
Yes, okay. And now, because I had some connection problems today, so perhaps, do you hear me or not?
Yeah, we do hear you.
Okay, perfect. First, let me thank EMED for organizing the 2020 EMGN annual conference under this EMGN project, of which, as you mentioned, Euro-Mediterranean Economists Association, EMEA, is very pleased to be one of the founding promoters together with EMED and GIZ. So this partnership really has allowed some activities to be put forward, and we are extremely happy, at least I speak about from EMEA side, that we are part of this. So we, of course, have co-developed and also supported financially this project. I'm extremely, I would say, delighted to see this project going forward, thanks to the commitment of all the credit guarantee schemes members from the south and the north of the Mediterranean. I also would like to go a bit in the history of EMGN, which I had the pleasure to be part of. I want to make a reference, because I was looking for these references. As an academic, I always look on references, to paragraph 5 of a declaration produced at a high-level working group we have set up back then together with EMED, where some of the credit guarantee schemes were represented also, in which we had worked together to really think about how to enhance the access to finance to the small and medium-sized enterprises. If you are interested to see this declaration, it is on the website of EMED and also EMGN. So this declaration was also endorsed at the 2011 Euro-Mediterranean Ministerial Conference on Industry held in Malta. So it is there. And also on the 2014 UFM Ministerial Conference on industrial cooperation held in Brussels. So this was really 2011 and 14, many, many years ago. And this specific declaration, if you look at paragraph 5D, we emphasized the role of guarantee institutions in the South Mediterranean, and importantly, the creation of a counter guarantee fund or funds. And this since when we have been really thinking about the enhancement of risks and risk taking back then. Also, this was a part of what I call the, in a way, a market failure in general in the South Mediterranean countries to, in fact, ensure that access to finance to small and medium-sized enterprises is affordable and at the same time is, there in those countries. Now, let me focus on this topic of this session. Counter guarantees are risk-sharing instruments. They work pretty much in developed countries, and they can mitigate the risks taken by the guarantee schemes. So they enhance the capacity of the guarantee schemes to take, manage the risk. They operate in countries like in Portugal, in Spain. I think we have studied those practices very much during the, under this EMGN framework. Now, this session will discuss the feasibility of those schemes in the Southern Mediterranean countries. So really, are they needed? What are the pillars for them to be set up? And also, particularly in the context of COVID-19 and post-COVID recovery. We know very well that in many countries worldwide, the guarantee schemes have been the channels of many governments to reduce the hardship of the COVID-19 pandemic for the real economy. Now, if I look at Europe, in which I had the pleasure to in fact work very closely with the European Banking Authority, massive public guarantees have been granted to reduce the distress to small and medium-sized enterprises, enhanced to keep the non-performing loans because of this economic recession in Europe at a manageable level. In the Southern Mediterranean, also exceptional measures have been taken in those countries, but according to our knowledge, the schemes that have been put in place are either partial blanket guarantees from the central banks, which they gave those to the to the guarantee schemes just to ensure that their portfolios are under, they have some support from the government, but the majority of them are really directly from the government or ministries and so on. So they cannot be seen as counter guarantee schemes. Now, EMGN tried to assess, the feasibility of those guarantee schemes in the Southern Mediterranean countries within this working group that has been established. And still, the working group is working on really assessing these type of mechanisms in the South Med countries, whether they are really feasible, whether they are needed, and also whether a Euro-Mediterranean, or I call it regional counter guarantee fund, is probably or not the way forward or not, and how, and if this is the case, what are the conditions and what are the applicability of those type of counter guarantee funds and schemes. Now, I have the pleasure to introduce this panel that will discuss specifically those aspects. I start with Jean-Louis Leloir. Jean-Louis is a special advisor to the European Association of Guarantee Institutions. I'm sure you have a lot to say about this, specifically in the context of the COVID-19. So please share with us for the next 10 minutes the European experiences of the counter guarantee schemes and what they have achieved in these 9 months. Thank you.
All right, can you all hear me? Okay, So the European experiences of country guarantee helped me to address a picture of how they operate in Europe and be the transition with the next speakers to how possibilities could be explored to get such systems working in the MENA zone. Thank you, Rim, for the introduction, and good morning to all colleagues and old friends which are following this discussions. So in Europe, counter guarantees are a frequent type of operations and have been used to increase the capacity of many loan guarantee schemes. Basically and technically, the counter guarantee is financial support given by a guarantor to another one when the second one needs to share some of its liabilities for many reasons. For instance, when part of his portfolios are high risk but valuable projects like startups of innovation. Secondly, because the guarantor has to have a fixed limit to its individual risks. And third of all, because the guarantor is not sure to get a good enough risk mitigation in its portfolio, which is the case in, of course, a difficult period, and also for guarantee schemes which operate in their relation with the banks by giving a delegation of decisions to the banks without discussing the yes or no for each individual guarantee that goes into the portfolio. And in some base of logic, you could say that a counter guarantor offers support and incentive to the loan guarantee schemes to go further in its risk management in a similar way than guarantor gives same support of incentive to a bank, which is usually casual. Counter guarantee open work mostly on portfolios, not on individual decisions. So what are the principles of such an agreement? The counter guarantor is a third party. We decide to support the guarantee institution because they share a common objective, or they will determine this common objective through the agreement which is signed between the two parties. And that's for a or several designated target groups of enterprises, which are both in their policies. So the counter guarantee sets a sharing of the risk at a certain percentage for a given maximum amount of a portfolio of liabilities. In Europe, and as Rim just mentioned, some counter guarantees are given by mechanisms which are backed by public authorities at the national level, such as the case of Portugal and Spain. And sometimes the mechanism is given by a regional authority to a regional guarantee bank, like in Germany. Apart from these operations, SME members can offer small volumes of counter guarantees, but the main actors are obviously the mechanisms offered by the EU. The main actors in Europe are the EIF, of course, part of the EIB group, which received this directive from the European Commission. Three main programs are operating, offering counter guarantees to loan guarantee schemes, and also offering direct guarantees to other financial intermediaries, to banks, leasing companies, or venture capital funds. So the main programs are COSME, supporting the logic of competitiveness, Innofin, supporting the logic of innovation, and one is supporting cultural and creative sectors. And these programs are reserved, namely, to enterprises of the European definition of SMEs. So just to few figures. I won't be given many figures, and unfortunately, the figures are not the figures for the response to the COVID crisis, because we don't have present aggregated figures for what is happening during the present year. But you see the outstanding facilities of EIF at the end of 2019. So you could say at a moment before all the threats of the COVID appeared. And of course, this is just the minimum level that perhaps this operation reached. So you can see that. So counter guarantees given by EIF to ACM members amounted to just over €1 billion. Some other guarantee schemes which we are not a member of ICM, 716 million euros. And on the other side, on the right of the picture, you can see that the amount of direct guarantees given by EIF to a large population of banks, right to about 11 billion euros, which is showing that counter guarantees, or at least this risk sharing through these mechanisms are inequality shared between what benefits goes to banks and what benefits goes to the European guarantee institutions. So what do we have in a counter guarantee agreement? There are various conditions, and of course these conditions also come on top of an assessment process made by the EU before they accept to sign with a guarantee institution. So the matters are eligibility factors, size, sector, and financial profile of beneficiaries, the type of supported projects or investments, the type of financing which is covered, and the fees when they exist. But the EU mechanism of COSME and INOFIN only have one of two contingencies. COSME has a cap, which means normally in normal conditions it cannot cover more than 20% of default. When INOFI has no cap, unlimited coverage in case of default, but charge a small fee. Also, the agreements cover all the operational rules of the guarantee institution regarding decision-making process, what information has to be provided, what claims and payments will be done, and modalities of export control, which is sometimes one of the slightly negative aspects of this relationship, because they pose a lot of, in the opinion of entities which are benefiting, a lot of paperwork in some cases. But we know that EU is trying to think and improve things on that side. So now I've presented 3 slides saying what are the benefits for each party. First of all, what are the benefits from for the guarantee institutions? So basically,
Jean-Louis, on ne voit pas tes slides.
Ben je voulais, attendez, je vois, est-ce que c'est ça? Non, c'est pas ça. Je vous lis carrément leur contenu. Donc, alors je suis désolé pour les chiffres de tout à l'heure. Les slides seront disponibles de toute façon après. Je pense que c'est avant tout des commentaires factuels et non pas des...
These slides will be provided later. And with regard to counter guarantee, there will be a provision of 5%. وأيضا الأمر يعتمد على المحفظة الائتمانية كما ذكرت. And this, in case of some economic challenges being faced, these schemes have some negative aspects, unfortunately, yet many measures are taken in order to mitigate such negative aspects. There are some rules imposed by the central banks, and some privileges are granted, adopted by the EU. There are some financial support modalities in order to share risks. That's why the cost of risk upheld by the counter guarantee institutions show that such counter guarantee based economy should adopt transparent mechanisms and would benefit ultimately SMEs. There are other privileges and with regard to counter guarantee mechanism, as it is based on definite rules and the banks and such privileges will not be applicable to all SMEs. It depends on the portfolio and the amount of privileges required. Accordingly, this allows the guarantors and EU Investment Bank and operators to save time with regard to paperwork. Therefore, with regard to entities that provide counter guarantee is to deal with beneficiaries directly and benefit from such institutions in order to provide counter guarantees. As for the different mechanisms adopted, it is based on rules. If we look at the bank's viewpoint, you only have 1 minute, sir. Banks benefit from the privileges provided, and this is a commercial privilege that is being provided. And if these guarantees are being given based on the portfolios of the SMEs to support the operations in such corporations, and in the end, allow me to say that with regard to SMEs, I believe they will have more coverage within the COVID-19 period in order to be able to mitigate the cost of risk and cost for obtaining guarantee. In the beginning of this year, and based on the request of some counter guarantee institutions, more flexible conditions are to be developed in order to share major risks and apply all the measures and actions required to minimize costs of risks. As well with regard to some other corporations we can say that we will be able to apply the same conditions during the period from 2021 to 2025. As well, all support required will be provided to the institutions in order to cover such risks. In addition, SMEs will be allowed to obtain or to have access to finance.
De cette période de Covid. Voilà. Merci de votre attention. C'est terminé.
Thank you very much, Jean-Louis. This is clear. Of course, we need to have a bit more time to understand exactly the impact of those actions during the COVID time. And I guess that now there is a monitoring of the, of the impacts of those public guarantees that are channeled via not only the credit guarantee schemes, but also the banks themselves, which have been one of the key channels to the real economy during the COVID pandemic. And actually, this is one of the key topics that have been raised also within the European Banking Authority on how to really deal with these changes in the market, and how to, in fact, assess them and assess the risk that is behind. So thank you very much, Jean-Louis. I would like to move on to Beatrice Freitas. Beatrice, she is the chairwoman of the board of directors of the Banco Portuguese the banker, president of the board of directors of the Ibero-American Guarantee Network, and also the Red Ibero-Americana de Garantías. So it's really a pleasure to have you, Beatrice, with us for the EMGN project, to learn of what you guys have achieved in Regard, and also to learn your experience of counter guarantee scheme in Portugal. Has worked pretty well. Please, Beatrice.
Hello. Hello. Thank you. Good morning, everybody. Bonjour. I have a presentation, so I will start to share, and I will speak about the Portuguese guarantee scheme. That was the purpose of my presentation, and what we have done during these last 6-7 months after the beginning of the pandemic crisis. So let me see if okay, I'm sharing. Yeah. Remy, I'm sharing, yes? Okay. Okay. So, let's begin. So this is what I will do. I will try to give you a background of the mutual guarantee system in Portugal. A little short presentation what we have done to create Banco Portuguese de Fomento. That is now the entity that is the governance of the mutual guarantee system, and some view of what we have done with the credit lines, with COVID credit lines, public guarantees in the last month. So I think most of the persons that are assisting okay, let me, I have here a problem. O que é que eu vou fazer para vocês? Pois, mas eu não consigo fazer nada. Okay, so I have so I think that most of you know about the Portuguese guarantee scheme. It's a scheme with 26 years of activity, and it has been very. We have a long story and very changed during the time. So we begin in at 26 years, and with a mission to improve the access of SMEs to finance instruments. And in this year, during the pandemic crisis, Portugal have a necessity to change some things in the scheme of the guarantees and create this new institution established by the merge of three financial institutions, and it is now the main shareholder of the Portuguese guarantee scheme. So we have a scheme. We have a scheme that is fully integrated scheme with the guarantee issued by autonomous financial entities that are mutual entities, which these entities benefit from a contra guarantee of a fund that is managed by Banco Portuguese de Fomento, and it is owned by the state, so it is issued by the state. The mutual contra guarantee fund, which is the principal mechanism of the system, is like I said, managed by BPF, and contra guarantees all the operations of the mutual guarantee system in Portugal, and it is a very important instrument. It is a very important instrument of the system. The contra guarantee is compulsory and works as a second level guarantee for all the portfolio of the system, and this is a very important issue for the financial system here in Portugal. The purpose of the contra guarantee is to reduce the risk incurring by the mutual guarantees societies. As you are seeing, we have several levels of guarantee and contra guarantee, and the main purpose is to have a sharing risk system. So we are sharing risk we have a sharing risk by the fund, with the mutual guarantees societies, with the banks, and also with the SMEs, because they are shareholders of the mutual guarantee societies. So we have a sharing risk by, when we issue a guarantee, we are sharing risk with four entities: the fund, the mutual guarantee societies, the banks, and SMEs. And this proves to be a very compulsory system. what is the, sorry. So we have a we have a system with several layers of risk. For the SMEs that who proposed the guarantees, these allow us to have access to finance with a more lower costs, and we have several levels of SMEs that access to these guarantees. This is very important for a very important scheme for the banks, because permit the banks to reduce the risk of exposure, and permit the banks also to have a guarantee that is issued by a public entity. Here in Portugal, the Bank of Portugal, that is the responsible for the financial system, give a great importance to the country guarantee fund, and to the issue of the guarantees from that fund. And the government and the public authorities that are the main financial of the country guarantee fund, they are working with us for a long time, and the fund permits to the public authorities to have to have a contra-cyclic public policy tool, very important in the crisis moments. It was very important in 2018, and it's very important today. This slide permits us to, I don't know why this passed so fast, but okay. This slide permit us to see what we have done during the 26 years that we are in the market here in Portugal. So we have done during these 26 years, we have done several studies to prove that the Portuguese mutual guarantee system have a really impact in the economy, and try to see and to prove that we add additionality to the economy. This was in the last 2 years I present the study, the last study that really proves and show that the mutual guarantee system in Portugal permits to add more to the economy in several points. We prove that it permits to have to access to that SMEs have a more easy access to debt, and that the Portuguese mutual guarantee system permits to elevate the access to debt of SMEs, that reduce the cost of the debt in the very expressive way, that increase debt maturity for SMEs, and that improves the investment of the SMEs also. So even we have proof during the times we have made 4 studies, and we are increasing the variables that each study are in we improve the number of variabilities that we study during the time and trying to prove that we really add some additionality to the SMEs and to the economy. So now I really like to present what we have done in the last year here in Portugal. It has been a very different year, not only because we have the pandemic crisis, but also because the pandemic crisis shows us that we have to move forward and look forward and even try to change and to modify the way that we see the Portuguese guarantee system. So we have done a huge change here in Portugal. We have a huge change here in Portugal in the way that the government and the SMEs are looking to the Portuguese mutual guarantee system. We have merged 3 financial entities and to create a national promotional bank. This is something that was have been in the mind of the government, of the Portuguese government for several years, but now during the crisis we have really feel the necessity to have a more comprehensive scheme and to have a more aggregate scheme in all instruments that are issued by public financial institutions. So we have merged 3 institutions, PME Investimentos, EFD and SPGM. SPGM was the society that used to be the main shareholder of the mutual guarantee system here in Portugal. So we merged these 3 institutions and create a more comprehensive public finance institution that is now Banco Português de Fomento, and it is the national promotional bank here in Portugal. So as the bank is a new institution, but is the merge of 3 institutions that had a long story during the time. The proposal of the creation of this new institution is to fulfill a more comprehensive mission of supporting the economy and the social development of Portugal. We try now, and we are thinking through this creation and offer a more innovative and adequate solution in line with the needs and the challenge of the business ecosystem. So what we see during this crisis, when we wish issue to the economy huge amount of guarantees, we see the need of have a more comprehensive view of the all mechanisms and measures that are issued by the public for the public side of the economy. So it's something, the creation of the bank is something that was seen as a need during this crisis, and is something that we see now as a huge value to the next month of this crisis, and something that will have a huge value to the next developments that we have here in Portugal. So the proposal and the principles that we issue to deliver, it's to grow, it's to finance sustainability and stability. The key markets that we are now, sorry, I don't know why this happened. The key markets that we are now focused, it's not only like in the past, just SMEs, but we are focused also in what are the key factors, in the key market factors for all the economy here in Europe. So SMEs finance, innovative projects, mainly focus on digital transition and entrepreneurship and innovation. A huge focus on green finance. So it's something that is very on board here in Portugal and in the main economies in Europe. As coming to with the crisis, we have also in our main focus for the next 2 years to create a huge social impact. So mostly to have some impact in the projects in health and long-term care, education and social housing. And we also are trying to focus ourselves in the new project as projects of infrastructures. As I said, we have now a more comprehensive I say panel or a more comprehensive panel of products. We don't have only guarantees. We will have guarantees, equity products, lending products. We try to do some advisory, some products linked to internationalization, and we also are dealing even in nowadays in in very special products here in Portugal. So until this day, we just only deal with guarantees here. Now we try to link guarantees with equity and direct lending. It's very important to move on, to try to move on and try to link all these products. These 3 lines of products that can be issued by the public. Yes, sorry.
No more than 2 minutes.
Okay, so let's move to the credit lines that we issued to COVID during this COVID outbreak. We wish a huge amount of guarantees during this COVID outbreak, and we start to issue these COVID guarantees in April, so in the first days of the crisis. As you see, we already issued a huge amount of guarantees. We have more than 6 lines of guarantees here in each. We issue more than 6 lines of guarantees here in Portugal, and we are now dealing to have another one. We have huge problems or operational problems. As you see here, during the last 26 years, we have an amount of guarantees issued around 3.5, 3.8 billion, and that's our portfolio, more or less during all years that we issue guarantees. Since in this year we already issue 6.8 billions of guarantees. So we are doing more than a double of what we are used to do. And we support a lot of companies. It was a very difficult year. The guarantees that we issue during this year provide support to the most SMEs that are that was closed for 2 or 3 months that we have here. So it's our second crisis here in the mutual guarantee system, and the experience that we have in the first crisis allow us to develop very quickly a response to this crisis. So, but it was a very difficult time. We are trying now to have some evolution in what we are issuing to the market, because we think that the main purpose of the guarantee systems here in Portugal and all over the world has to be adapt to what the SMEs need in each time and in each moment. So we begin, and it's something that I will finish by saying this, and it's something that I really feel and I want to share with you, with all of you. Our proposal is to issue guarantees, but it's what the SMEs and the SMEs need in the moment. In the first days of the pandemic crisis, we issued a type of guarantees. Now we are trying to move to another type of guarantees. So we begin to issue individual guarantees. Now I think that we are moving on to we have to move on to portfolio guarantees here in Portugal. So we are trying to adapt our system to the needs of the SMEs and try to not to be freeze by just one product. And this is very important. Very important in the moments that we are now past year in Portugal, and we are also trying to move on to guarantees with the capital and try to merge guarantees with the capital products. That's different, but it's something that we really need to move on. Thank you.
Thank you very much, Beatrice. A very comprehensive presentation. I want to move very fast because I see the time passing. So we have our colleague from Morocco, Abdelmourith Abdelmoumen, who is the head of strategy and cooperation, Caisse Centrale des Garanties, Maroc. Please, Abdelmourith, please keep your comments for 7 minutes. And this is also the same for Bernd, because we need to finalize this session. I see the time at 12:30 sharp, and I would like to have some discussion with the panelists and the audience. Thank you. Abdelmonem, the floor is yours, 7 minutes.
Okay, thank you. Good morning, everybody. So about us, so I will be brief because currently we don't have, we are not involved in a counter guarantee scheme. I will talk about our previous experience and why we didn't get into a counter guarantee scheme currently, but maybe it can be considered in the future. So before we had many years ago a counter guarantee scheme with the European Union. So it was a program between the European Union and the government of Morocco to support the existing credit guarantee schemes in Morocco. So they offered to us a counter guarantee covering up to 60% of our portfolio with some conditions like the exclusion list for some activities that are not accepted by the European Union, and it was free because it was technical assistance between the both sides. And after that, once the program was ended, the remaining after having paid the counter guarantee claims were simply injected in our credit guarantee fund. So it was a special non-commercial counter guarantee scheme, but it was very helpful for us because it helped us especially to develop our reporting practices and also to get more aware of some issues like environmental conditions and so on, because they are systematically reviewed by the counter guarantee scheme in the European Union at that time. So now we have our activity has developed grow very rapidly during the recent years. We are witnessing two-digit annual growth, and this year it was very special because in 2020 the level of activity is about four times the general normal activity. So and it's mainly driven by high risk guarantee products, especially COVID-19 products. So why we didn't get into a counter guarantee scheme? The reason is the answer could be based on many aspects. So the first is the cost. So we are a non-for-profit institution. So our guarantee fees are among the lowest in the world. So, for example, the highest risk guarantees like the entrepreneurship, which we cover up to 85%, are free for the beneficiaries. So we don't charge a guarantee fee. And for the COVID-19 products, for which we have guarantees up to 95%. We charge only 0.1% of flat of the credit amount. So when we talk with some counter guarantee institutions, especially from the European Union, the cost for insuring or counter guaranteeing 1/3 of our portfolio exceeds our entire guarantee fee income for the whole portfolio. So this is why we weren't able to maybe to get any deal with the counter guarantee scheme outside Morocco. Also, the other reason is that as our activity is funded by the government of Morocco, so the Ministry of Finance is systematically waiting or carrying out a trade-off between the cost of counter guarantee and the cost of simply borrowing from international institutions, especially from European institutions. For example, to fund our COVID-19 products, the government was able to secure a loan for about 400 million euro at interest rate from European Development Institution at interest rate almost equivalent of our guarantee fee. So when we compare this to the cost, for example, if the Moroccan government is asked to fund us to cover the counter guarantee fee, so the cost of borrowing is really lower than the counter guarantee, and also the borrowing under these conditions allows also the government to get foreign currency inflow. So they have many reasons for which getting commercial counter guarantee with our fees and with our sovereign guarantee covering us in the last resort is not currently possible for us, unless it can be the cost could be maybe alleviated by any kind of scheme, like for example the government itself, for example, to reduce our maybe our exposure and to reduce especially our prudential ratios and regulatory capital towards the central bank. Otherwise, I think that it will be very difficult to consider counter guarantee for our situation in the present. Yeah, thank you.
Thank you, Abdelmanam. I think you made it extremely clear. So we need to look at the conditions for the establishment of a counter guarantee and assess the specificities of each country, whether they really have the ecosystem to establish such funds or such schemes. Now, I would like to move to our last panelist, Bernd Leidner, who is the managing director of the Land. So please, Bernd, the floor is yours. I think you can give us some input on based on the work you're doing, and then answer to those questions which I mentioned at the start. Please.
Thank you very much, and thank you for having me. Good morning to all of you, or good afternoon rather. I would like to start my presentation with the example of Germany. We have the loan of 100% covered initially by guarantee banks, 80%, and 20% risk staying with the commercial banks. The guarantee banks are private. They're owned by the self-administrative bodies of the economy, like chambers of commerce, associations, also some banks or insurance companies, saving banks can be part of it. And we have these guarantee banks on federal state level. So each federal state has its own guarantee bank. These guarantee banks refer to counter guarantees from the respective federal state, as well as from the federal government. So the 80% risk that the guarantee banks have with them is translated into 21% to the federal state and 31% to the federal government. 28% stays with them, and anyway 20% with the commercial banks. That means that overall the private sector, counting that the guarantee banks are private entities, the private sector covers 48% of the risk and the state covers 52%. In a study that was done that I found very interesting, I will not go in much detail, but there are 2 points that I would like to point out. First, on the guarantee bank level, the study mentioned that 71% of the investment that was guaranteed was actually additional, and 31% of the sales that the guaranteed businesses generated was also additional, would not have been done without these guarantees. And now, even more relevant to our topic today, in terms of the counter guarantees and the fiscal benefits that these incurred, the study shows that the GDP growth and deployment effects, so the macroeconomic impact it created, exceeded 7 times the cost of these counter guarantees. I find that a very interesting finding, and I was surprised to see that. And referring to what just Abdul Murid said about the cost, that clearly speaks for these counter guarantees to be clearly subsidized, and we feel that should be the case also. We are discussing here, and that is also in response to what Abdul Murid just presented, we are discussing a regional approach versus a national one. And the experience from Morocco and the considerations not to go for it right now were clearly, I think, related to the fact that it was on a national level. And we believe that there are certain arguments that speak for a regional level that I would like to point out. The first one is that a regional guarantee fund, counter guarantee fund, would really be a true risk mitigation. Specifically in the MENA, most of the guarantee schemes or the national guarantee funds are public. Hence, having a national counter guarantee scheme would basically not really share the risk, but eventually still would be with the government. Here, there would be a true risk mitigation by sharing the risk with a different non-state entity. And that might be, in light of the increased risk appetite that needs to be covered under the COVID scenarios, might even be more relevant than it usually is. We think that a counter guarantee scheme makes sense, national or regional, if it creates additionality. And in principle, I mean, basically what it does upfront is it increases the guarantee capacity of the guarantee institutions that avail of this counter guarantee, thereby allowing them to do more business and to grow without increasing their equity or their capital themselves. However, that only works and that only makes sense if there is a need for it. If the guarantee funds are faced with certain constraints that this sharing of risk or the increase of leverage that they can do or the increase of guarantee capacity is actually needed. That is a very strong point and would work towards serving certain constraints that the guarantee funds face right now. Obviously, a guarantee fund, a counter guarantee fund will diversify risk, and it works on both levels, on the guarantee level itself, where risk diversification is required, and it works on the counter guarantee level, where in a regional case, the diversification of risk is across nations and therefore more substantial. We think that a counter guarantee fund working with several guarantee funds on a national level could create certain incentives and maybe induce a certain level of competition between the guarantee funds in the countries. If the conditions of the counter guarantees were linked to performance of the national guarantee funds, that could well induce for and provide incentives for good performance. Could be done that coverage levels could be based on performance, or pricing could be based on performance. And performance might be risk considerations, might be volume considerations, or fulfillment of mandate considerations or similar. A counter guarantee fund, if regional, has to and could, if set up properly, have improve the recognition that the national guarantee funds have in their central banks or supervisors. And it could also, and we find that quite a relevant point, and it's related to the diversification of risk, but not only, it could balance different national macroeconomic evolutions and you know, balance the growth path between those. A regional guarantee fund, if working with national guarantees, could establish certain benchmarks. They would have insight into the performance of these individual guarantee funds. They could identify benchmarks of best practice, and could share these and create data, add additional value to the guarantee funds by using these benchmarks for certain purposes. And obviously, currency risk is one of the main points. My last slide, Reem, to give you some comfort of timing. Obviously, counter guarantee funds, if set up on a regional level, would have to balance the idea that national guarantee funds have different objectives, different products, different approaches to the market, and so on. So there would have to be a decision to be made whether that counter guarantee scheme would be kind of harmonized, finding the common nominator in all these national fees, in these national schemes, or would be open to various needs and various approaches, and maybe also able to serve individual needs of specific guarantee funds in the countries. Cost considerations, we already touched it. We believe counter guarantees should be subsidized strongly, and we had arguments for that. Regulation in the different countries is a point that needs to be covered in the design, because the guarantee fund itself, as well as the national guarantee funds, as well as the banks using the national and the counter guarantees, will have to receive proper recognition of that. We feel that a counter guarantee fund on a regional level would have to have a capacity building envelope of funding, so as to use the benchmarks and the findings and the comparison between different guarantee funds on the national level to promote improved performance of these. There are operational aspects that need to be evaluated very thoroughly. What is the due diligence? What are the eligibility criteria for the national guarantee funds to be eligible to participate? What are levels of automation, data, nowadays in times of digitization, and other operational cost levels? The question of who will provide the funding, who owns this counter guarantee scheme, and who manages it is a very important point. And over time, we believe that there is a potential to crowd in private investment by creating a blended approach of this counter guarantee scheme, where soft money takes higher risk classes and private money, insurances, banks, hedge funds, and so on, could be involved in having other classes of shares that bear less risk. So that was an admittedly very fast view on what is the situation between national counter guarantees and regional ones, and what would be the key design considerations that would have to be taken in case of a regional guarantee fund. Thank you very much.
Thank you. Thank you very much, Bernd. This is very clear, very straight, I would say, to the point presentation, which in fact give us food for thought, or gives the EMGN project working group dedicated to this topic food for thought. We're very happy also to have you as part of the group members, which in fact hopefully will take some of those recommendations forward. So I see the time, and only 3 minutes left. I am looking at the Q&A. There is one question which is made by one of the attendees. So it's also to think about more cooperation between different entities in the different countries. So for example, ministries of small and medium-sized enterprises, or initiatives, or international cooperation. So I think this is also an important dimension, is coordination between the different entities, but they also between the credit guarantee, active credit guarantee schemes, and also other ministries which have other initiatives probably dedicated to the small and medium-sized enterprises, but also the central banks. I think nowadays central banks also have a large role on those aspects. Now, on the counter guarantees, as you heard it, in the South Mediterranean, still more work has to be done in that sense, and to assess the feasibility of either a national counter guarantee system or going forward and moving into a regional fund for risk mitigation, risk sharing, and diversification. So this is probably an ambitious endeavor, which has to be very carefully assessed and studied and probably implemented in the future. So I would like to thank all the panelists for this very interesting discussion. And I would like to hand over straight to my colleague, Haider Baghdadi, who is the head of the GIZ project on financial inclusion in the MENA. And also he is the training and technical assistant coordinator, and one of the GIZ is one of the co-promoters of this project, EMGN. Thank you very much, all of you. Haider, floor is yours.
Yeah, Rim, thank you very much. As Rim said, we are coming now to the closing session, and I would already like to say thank you to all participants for your patience and attention, for having listened to these two great sessions. And I have now the honor to introduce to you Mr. Selim Florenza. He's the president of the executive committee of the European Institute of the Mediterranean, EMED. And please, Mr. Florenza, the floor is yours. Thank you very much.
So thank you very much. Maybe you can hear me properly. Do you?
Yes.
Can you hear me? Okay.
I can hear you.
Okay. So it's really a pleasure and honor to be with you at this occasion for this let's say, institutional final session of this annual conference of the Euro-Mediterranean Guarantee Network. It's an honor to be along with all the organizers. I have to thank especially Professor Rima Yadi, who, as you know, is the president of the Mediterranean Economists Association. I have to thank also the people at the IEMed, especially Roger Albignana, who's the director of regional policies and development at the European Institute of the Mediterranean, and along with our partners, and especially I have to thank the Deutsche Gesellschaft für Internationale Zusammenarbeit. Well, these days, as it's been said repeatedly, we are commemorating the 25th anniversary of the launching of the Barcelona process. So in these final institutional words, I have firstly to refer to it because it was a very big milestone on the Euro-Mediterranean process. And of course, the economy is always an essential part of all human endeavors, because of the main goals that were part of this big Euro-Mediterranean project, as you know, was to build around the Mediterranean this area of peace and stability, this area of shared economic progress and dialogue among peoples and cultures around the Mediterranean. The basis, of course, the way to achieve it really was economic. It was through the free trade zone and the economic progress that it would launch, etc. In these days of commemoration, of course, there is a division of opinions, as always. We had the opportunity to reinforce this Euro-Mediterranean partnership, first from a bilateral point of view of relations with South and East Mediterranean associate countries, with neighborhood policy of the European Union, and then from a regional, general EuroMed point of view, with the launching of the Union for the Mediterranean since 2008. But now, after 25 years, there's people, of course, who prefer to see the bottle half empty, and others who see the bottle half full, because thanks to the efforts of all the people in these countries, although the enormous problems we had to face, especially from the point of view of the first of the main goals, so from the point of view of security and the point of view of stability, well, we had a deluge of problems from the September 11, Afghanistan, Iraq, and then now Syria, etc. But countries have been made what they could, and we go now and travel around Morocco. I see a different and better country than I saw 25 years back. And the same happens with the countries who really took advantage of the opportunities, although of many of the problems. And so, well, bottle maybe half empty, and if we see what it remains to be done, but we have to see the achievements that the people have achieved with their efforts and etc. Although the difficulties they have found on their way. Now, this year of the commemoration, we have the pandemic. This puts at risk many of the things, and especially in the countries, in the associate countries, where the social structure is more fragile, where the economy is also more fragile, and so this adds to the risks. And so this is why I celebrate especially that the Mediterranean Guarantee Network keeps working, as since it has been founded, and we were happy to be with them since 2012, because the pandemic has two aspects. It has, of course, it's a health, sanitary crisis, but it is which impact an economic and socio-economic crisis, and it especially hits small and medium-sized enterprises, and this is how all the methods are necessary. Of course, we know that the launching, and we hope that we'll go through in a proper way, of the Next Generation program by the European Union, which has a whole part of it prepared to work together with our partner countries south and east of the Mediterranean. And so this will, of course, help to put in movement all the wheels for the recovery. But we need to help people and small, especially small and medium-sized enterprises at risk. And this is how I am happy that this network keeps sharing good examples, good experiences, reflecting together on the possibilities of helping households, firms, etc., to get a way out of this, not only sanitary, but economic and social crisis. And this is how I think this seminar was especially interesting at this point in time. So I can only hope that your work leads to a better understanding of all the mechanisms, not only to provide financement, but to provide guarantees and to provide security. I remember the times when I was working especially on cooperation for development at the Spanish agency, and I was one of the representatives in the Spanish schemes for the guarantees. And I know how important it is. I know how important it is. And so I thank you all for keeping working in this field, which is now more necessary than ever, and to help people to get the way out of this crisis and to transform, I would say, the problems into opportunities, the challenges into opportunities, because we know that unfortunately many of the firms will not survive. And this is a reality. We cannot forget it. But this is as well the opportunity for new ideas to go up and go along with success, and to engage people who are left over by the old firms who could not survive, to get them engaged in new opportunities. And we know this new way to focus on the reality and to have a better society than before. This will require the efforts of everybody, because we know of the challenges we have from the environmental point of view, from the gap in the many fields of how to use the capacities we have now to clean the water, to clean our seas, to face the climate change, which is endangering so much, especially in the Mediterranean area. And well, we know that we have to take advantage of I would say, the numeric challenge, how we can use the new technologies to have a stronger and better economic network in our societies when we get out of the pandemic and the economic crisis. This will take the effort of everybody. And I'm especially grateful that the Euro-Mediterranean Guarantee Network keeps working to show the way to many, especially SMEs, how to take advantage of the new possibilities for the recovery that will have to go, I hope, in a short time. Of course, we have first to fight the sanitary aspect of the pandemic, but then we have to relaunch our economies and to have a proper accompaniment by financement and guarantee schemes is essential. So thank you very much for inviting us, and we'll keep working with you as much as we can. Thank you very much to everybody for your attention.
Mr. Freitas, thank you so much for your final words, and they're very encouraging and inspiring, and they will definitely actually motivate EMGN to go further and to continue the work that has already started. So thank you very much for these wonderful words. I also would like to say thank you on behalf of the EMGN coordinating team. Thank you to all EMGN members for your active participation today. Also thank you to all guests who have actually taken part in the conference today. Thank you for all the inputs and contributions, very helpful contributions coming from our members, from our esteemed members, for sharing their perspectives on their actually activities. And also thank you to the European Commission, to EIB, for sharing your perspectives and sharing your knowledge with the EMGN network. The same goes to RCM and Rega. And I also would like to say in particular thank you to Ambassador Kemal from the UFM, the Union for the Mediterranean Union. We are very honored to get this special attention for EMGN from Ambassador Kemal. We are very honored. Also, thank you to Naglaba, our wonderful lead representative of EMGN. I think actually Roger said it very well. He put it very nicely, saying that with her dedication and passion, she really helps to drive EMGN forward. And this passion and dedication is also needed. So, Naglaba, thank you very much. Thank you to the coordinating team, to Roger and his team from EMED for having organized this first virtual annual conference. From my point of view, it really went well. And thank you also to Rim and her team for the great cooperation we have in the terms of the coordinating unit. So there were two sessions today. I have some highlights, some takeaways that might also be helpful for the EMG networks as an orientation. I think we heard from Ambassador Kemal that actually financial inclusion is a very high policy priority area. because only an inclusive financial system can really, it's a prerequisite for inclusive growth. Because inclusive financial sector really helps to include small and medium enterprises and also micro enterprises to get access to financial services. And we know that in many Arab countries in particular, the level of financial exclusion is still very high. And I think through credit guarantee schemes, we can really make a difference, or EMGN can make a difference, that more enterprises get access to formal financial services, which is badly needed. I also like very much what Nagla Bar said. We are here to learn from each other. I think this is what EMGN is about. It's a peer-to-peer learning network that you learn from your peers about good practices, but probably also about not so good practices, so that you can share your concerns, your grief sometimes you have. And I think that's really great that EMGN provides this platform for learning from each other, peer-to-peer learning. But I think that EMGN also has the potential in the future to become an innovation-driving network, not only to share experiences, but also to help to drive innovations, to come up with new guarantee products in innovative areas like equity guarantees we talked about, and standard guarantees, but probably also new areas, new sectors where guarantee schemes need to be developed. I like very much, I have to say, from Jordan, the contribution from Mr. Mohammed. He said that 60,000 jobs have been saved because of the facility and the underlying credit guarantee scheme. I think these numbers are very important, and I think we need this evidence for the political communication to show that guarantee schemes are very effective, to save jobs and to save the economy. And I think more numbers, more evidence is needed also for the advocacy work of EMGN, which is also part of the network task. I think, like, I often heard the terms frontline workers during the crisis. I think that you, as representatives of credit guarantee schemes, you were also kind of frontline workers, because you really helped to pump oxygen into the private sector, to help SMEs to get liquidity, to really survive. And I want to congratulate all EMGN members. I think you had a very difficult year with the pandemic, but you really helped enterprises to survive. So you are very system relevant, I would say, and you are frontline workers for the economy. Last but not least, I have two more points. I think one point is the mega trends that was mentioned by BPR France from our colleague and friend Virginie. She was saying mega trends. She mentioned mega trends, and one of the mega trends can also be maybe an orientation for the EMGN network to find future priorities, greening the economy and greening the financial sector. So this is maybe also something that EMGN can take up for the future. And also happy to see the ongoing discussion between EMGN members and the European Commission and EIB, that maybe in the future there will be co-guarantee arrangements between the European Union and the members of EMGN. That would be wonderful. It would be great if this annual conference could have contributed to that. So the last session, I think, also informed the discussion with the EMGN network to find an answer to the question whether or not a regional counter guarantee scheme is needed, or only at the national level. So I think it was a great discussion and informs the further quest of EMGN to find the answer to that question. To sum up, I think this annual conference has really shown that EMGN is alive and kicking. And we had a very difficult first year of the restart of EMGN with the pandemic. There were many challenges to go from face-to-face to digital formats. I think we managed quite well, although there were setbacks, and we're going to talk about that at the steering committee meeting. But I also want to announce now to all the EMGN members that we have the steering committee meeting after this meeting at 2 o'clock Brussels time. I would like to say thank you for your active participation. See you, the EMGN members, see you at the steering committee at 2 o'clock p.m. Brussels time. And who are not EMGN members, to those of you, I wish you a wonderful end of the year. Actually, remaining weeks of the year. I wish you a safe and smooth transition into 2021, and hope to see you again, hopefully next time face-to-face and not virtually. So thank you very much. Thank you, everybody.
So bye-bye to everybody. Good luck.
Thank you, everybody.
Okay, bye-bye.
Bye, everybody.
Thank you. Bye.
Everybody. Reem, bye-bye.